Where will the price of Bitcoin go this year, and will Ethereum recover? Which altcoin sector is likely to lead the way? If you want to know the answers to these and many other questions, be sure to watch this video. In it, we'll break down one of the most important institutional reports from a true giant in the crypto industry. My name is Nick, and don't go anywhere. I'll start by saying that none of this video constitutes financial or investment advice. This video is created solely for entertainment and educational purposes to help you on your crypto journey. Now that that's out of the way, let's dive in. The report we will be summarizing today is called Crypto Market Outlook for 2025, written by Galaxy Digital, one of the largest and most respected crypto investment firms. We'll leave a link to the full report in the description so you can refer back to it whenever you want. The first part of the report deals with Bitcoin price predictions. The first statement, Bitcoin will surpass $150,000 in the first half of the year and test or exceed $185,000 in the fourth quarter of 2025. The report notes that this will happen due to a wave of investments from institutional investors, corporations, and of course, governments. It's noted that Bitcoin is the best asset in history, and it will reach 20% of the market capitalization of gold. For context, the market cap of gold is $18.7 trillion, meaning Bitcoin could reach a market cap of around $3.7 trillion, which is more than the entire crypto market today. This also means doubling Bitcoin's price even at current levels. Not bad. The second prediction is that Bitcoin ETFs in the US will accumulate more than $250 billion in assets under management, AUM. Bitcoin ETFs, especially spot ones, are growing rapidly, and Galaxy expects this trend to continue. The next prediction is quite interesting. Despite the success of spot Bitcoin ETFs, no asset manager has yet recommended Bitcoin as part of an investment portfolio. This is expected to change, with at least one asset manager recommending allocating at least 2% of the portfolio to Bitcoin. This 2% of billions, possibly trillions, of dollars will lead to a massive influx of capital into Bitcoin. The report further states that 5 companies from the NASDAQ 100 index will add Bitcoin to their balance sheets, and 5 countries will announce adding Bitcoin to their sovereign wealth funds. It's stated that Bitcoin will be accumulated either through mining or purchases. While 5 countries adopting Bitcoin may sound like a fantasy, the report suggests that the US position could lead other countries to follow suit. It's also predicted that Bitcoin miners will agree on the next Bitcoin Improvement Proposal, BIP. BIPs are Bitcoin upgrades, and historically, agreeing on such proposals has been rare. However, the report expects miners to agree on 3 key proposals: OP.CV, OP.CSSFS, and OP.CAT, which will expand Bitcoin's functionality by adding features similar to Ethereum's smart contracts. Finally, it's expected that the amount of Bitcoin locked in DeFi protocols will almost double in 2025, with 70% of wrapped Bitcoin being used as collateral in lending protocols for yield generation. Moving on to Ethereum, it's predicted that Ethereum will reach $5,500 this year due to improvements in DeFi regulation, partnerships between DeFi and TradFi, traditional finance, and corporations experimenting with Layer 2 networks. Galaxy also expects the revival of blockchain gaming and NFTs, which could significantly impact Ethereum's price. It's also predicted that over 50% of Ethereum's circulating supply will be staked as clearer regulations emerge in the US. This could allow Ethereum ETFs to stake some of the Ether they hold. Another prediction, the ETH-BTC ratio will drop to 0.03, but this year it will rise above 0.045. As Ethereum struggles with its pair against Bitcoin after the merge, regulatory changes could lead to an increase in investments in Ethereum, which might cause its price to rally against Bitcoin. The final Ethereum-related prediction, Layer 2 networks will generate more economic activity than alternative Layer 1 projects. It's expected that frequent spikes in transaction fees on Layer 2 will push the scalability limits, requiring adjustments to gas limits and blob market parameters. Regarding DeFi, the report predicts that DeFi will enter an era of dividends, where users and token holders will receive over $1 billion in dividends from treasury funds and revenue-sharing mechanisms. Some DeFi protocols like Aave and Venus are already exploring ways to implement dividends, while others like Uniswap have rejected such mechanisms but may reconsider their stance. It's also expected that on-chain governance will make a comeback, with applications experimenting with new governance models such as Futar. This model uses prediction markets for decision-making, allowing the community to vote on goals and market participants to bet on policies most likely to achieve them. The report continues by discussing banks and stablecoins. It's predicted that the Office of the Comptroller of the Currency, OCC, will pave the way for the 4 largest asset custody banks to become digital asset custodians. This means large banks like BNY Mellon, State Street, JP Morgan, and Citibank could store at least Bitcoin, if not other cryptocurrencies. It's predicted that at least 10 stablecoins will be issued by traditional financial institutions. Stablecoin transaction volumes are already far outpacing many traditional payment platforms, and large asset managers like BlackRock and VanEck are already integrating stablecoins into their business models to stay ahead of competitors. An astonishing prediction: Tether's market share could drop below 50% due to competition from alternatives like BlackRock's SPLL and USDC, though Tether still holds the advantage as the most widely used stablecoin. In conclusion, the report talks about investment in policy predictions. It's expected that venture capital investments in crypto will exceed $150 billion, 50% more than last year, due to lower interest rates and regulatory clarity. However, it's also noted that legislation on stablecoins is likely to be passed in the US, while broader market regulations for tokens and exchanges may not be developed. Finally, the report ends with a more bullish prediction. Dogecoin could reach $1 and a market cap of $100 billion, thanks to Elon Musk's involvement in the Department of Effective Government project, which could save trillions of dollars in government spending. So, what does all of this mean for crypto in 2025? The key takeaway from the report is that regulation in the US will be the main catalyst for crypto success. If Trump fulfills his promises regarding the regulation of the sector, the crypto market could grow in ways we can't yet imagine. In particular, Ethereum could benefit from this, as clearer regulations could lead to greater institutional interest. The Ethereum rally could also drive the growth of the entire altcoin market. Thank you for watching my video. Good luck to everyone and good profit.